On today's video, we'll be talking about another down payment assistance program in the state of Texas, specifically in the San Antonio and some of the surrounding counties. We're talking about the Neighborhood Housing Services of San Antonio, the NHSS Down Payment Assistance Program. The purpose: help underserved borrowers achieve home ownership. So down payment and or closing costs, depending on the loan type, and it's for purchase owner occupied transactions only. I was going to say no investment properties, but there's a way that you might be able to get into one and be an investor as well. So as we move forward, the eligibility criteria for this program is: number one, you have to be a first-time homebuyer, meaning you cannot have had ownership in residential real estate in the most recent 3 tax years. We're going to validate or verify that by looking at your tax returns for the most recent 3 years to make sure that there was no mortgage interest or anything of that nature. So as long as you fit that broad definition, that will qualify you for being a first-time homebuyer. Citizenship requirements: you must be a U.S. citizen or a permanent resident alien with a valid Social Security number. Number 3, there's income restrictions that can go up to 120% of the area median income. And that AMI, that area median income, is based on San Antonio or the Bexar County area. You could do so for conventional loans. And then if you're looking to do a FHA loan, you can go as high as 115% of that area median income. And again, the occupancy of the property has to be owner occupied, and it has to be primary residence only. The down payment assistance is repayable. That's something that you must know. You must repay this down payment assistance. It's not a silent second, and there's no forgiveness periods or a grant period tied to the money. It comes in 2 variations, if you will. It comes in as minimum of assistance as $5,000 or as much as $5,000 to $9,999. And that is going to be amortized over a 10-year period. And the interest rate is going to mirror whatever the interest rate is for your first mortgage. So as an example, if you get an FHA loan at 6.5% interest rate for $100,000, all right, and then the second part, or the closing cost part, if you will, be 6.5%, depending on the size of the down payment assistance. If it's from $5,000 to $10,000, it'd be amortized over 10 years, okay? And that's how the payment will be calculated. If it's $10,001 to $20,000, then the payment is amortized over 20 years. And again, the interest rate matches the first interest rate, okay? The maximum CLTV, combined loan to value, is 105%. So when you add the 2 loans together, depending on the loan type, it can't exceed 105% of the appraised value of the home. And the areas, the counties in which you can use this down payment assistance program in is Bexar County, Comal County, Kendall County, Bandera County, Medina County, Atascosa County, Wilson County, Guadalupe, okay? And that's a fairly recent update because at one point in time, it was just Bexar County. Again, the lien position will be in a second repayable position. And as I alluded to earlier, a 10-year maximum term for a loan size of $5,000 to $9,999, all right? And then 20-year amortization for any loan size from $10,000 to $20,000. And again, I'm saying loans because it's repayable, but it's going to be used to help you either with your closing costs or down payment and closing costs, depending on the loan type. We're going to get into that here in a second. So now, qualifying criteria. Minimum credit score 580. That's nice because some of the state programs that we love, minimum you have to have a 620 middle score, really a 640 to not have some additional costs. But this is nice in that FHA, if you can get an approved or manual underwrite, if you will, and everything is in line, 580 gets you in the door to help you overcome that barrier of the closing costs, say if you have the down payment or vice versa, or a combination of the 2. Debt to income ratios. You cannot exceed 35% of your housing expense and then no more than 45% of your total expense. And the way to look at that is this: you just take your gross income, your gross annual income, multiply that times 0.35, 35%. That'll give you the annual percentage. What it's saying is no more than that number, 35% of your gross income should go towards your housing payment. Okay. You get that annualized number, you divide it by 12. That will tell you how much your principal, interest, tax, and insurance payment cannot exceed. That's what that's saying. And then the 45%, the back end ratio, is where you take the proposed house payment, principal, interest, taxes, and insurance, and any other monthly obligations that count towards your total overall debt for home loan qualifications. And that number combined, proposed house payment and the monthly obligations that you have, can't exceed 45%. Don't let that stress you out. Reach out to your lender and they can help you with those calculations. Easy peasy, pumpkin squeezy. Moving forward, cash reserves with this program prior to you closing on your home loan. And we've worked out all the numbers. After you've closed, you have to have 1 month post-closing, after closing, of your principal, interest, tax, and insurance in some type of account that you can access. Checking, savings, qualified 401k, things of that nature, right? And then you cannot have a maximum of you can't have more than 5 months worth of savings in one of those types of accounts. And that might sound counterintuitive, but remember, these programs are really to help people that have the ability to make the monthly payment, but for whatever reason are struggling with coming up with a down payment and or closing costs. And that's keeping them off of the property ladder. So that's the spirit in which those criteria are coming from. Let's move forward. For those of you that don't know me, my name is Robert Lewis, and we simplify the home loan process. If you like videos like these, comment so that we know this information is what you want to see. So now, what are some of the borrower requirements? This is where I was alluding to earlier. So I really want you to pay attention on the type of loan that you do will dictate if you can use these funds for down payment and closing costs. The minimum investment requirement when we're looking at a conventional loan, really, if you work everything out, okay, with the down payment and closing costs on a conventional loan, the minimum requirement is $250 from your funds, you as the buyer, okay, as far as the first lien is concerned. Now, when you're doing an FHA loan, you must meet the minimum required investment, the MRI, which is 3.5%. So with FHA loans, this program and these funds are really to help you with the closing cost, and or if there's any left over, help you have a principal reduction, if you will, in the purchase price. So the minimum required investment, the 3.5%, must come from your funds or a qualified gift fund situation from a family member or something of that nature. Again, your lender should know how to help you put that together. Number 2, you must take a home buyer education course that's HUD certified. All of these programs are going to require that. Be honest with you, if you're a first-time home buyer, you should be doing that anyway because, again, you want to be very well educated. Now, fees. You want to make sure that you understand any down payment assistance program that you deal with, there's going to be fees associated with. So the 3% fee is based upon the down payment assistance because the Neighborhood Housing Services of San Antonio is a separate entity and they have employees and things of that nature. So they have fees that are associated with the down payment assistance program and the administration of it, okay? But that 3% and those fees are based upon the down payment portion that you're getting, not the overall loan amount, okay? And then, as always, this program is going to encourage a home inspection. We always encourage home inspections when you're buying a home. Again, you want to know what it is that you're getting into now, opposed to buying a home and having something come up that you didn't do your due diligence on and quote unquote have buyer's remorse, right? We don't want to have buyer's remorse out here. So let's move forward. The types of properties that you can buy with this program. And before I go forward there, let me digress. I mentioned conventional as far as the minimum required investment that you have to have in FHA. Those two things are not applicable with USDA and or VA. So you can do a USDA or VA loan with this program, but all you're really going to be dealing with are your closing costs, right? Because there's no down payment with those two types of programs. Moving forward, property requirements. You can buy a qualified single family residence, a condominium or a townhome, a duplex. That's what I mentioned earlier about investment property. So this is awesome if you're someone that's wanting to not only get on the property ladder, but dip your toe into becoming an investor. If you can find a duplex that you qualify for, you're living in that primary unit, we can help you with those closing costs in the form of this down payment assistance that's repayable, but it's much smaller in price and offers a wider brush, if you will, to help more folks get onto the property ladder. So you could do that 2-unit, and you can also do manufactured homes that qualified manufactured homes. As far as the income limits are concerned, as you can see with the conventional loan, we can go as high as 120% of the area median income. And the FHA loans, we could go as high as 115% of the area median income. And there's updates to these income guidelines and things of that nature. So you want to stay tapped in with your lender because they should know what those things are if you're interested in these types of programs and this program in particular. If this is something that you are interested in and you are in the areas that I aforementioned and you don't have a lender, contact us and we would love to see if this program is a fit for you. Because as I say all the time, there's really no excuse for you not to be a homeowner if you really want to be. There's a ton of programs out here that are available to help you overcome the largest barrier, and that's not only down payment, but it's closing costs. We would love to partner with you or reach out to your lender and ask them about this program if they have not mentioned it to you. We'll talk to you soon. Peace.